All right, today I want to take a look at the stock market. Um, we kind of the same principles apply to stocks that apply to gold. We're probably closer to a bottom than a top. You want to buy bottoms, you want to sell tops. um, Eventually, we'll get a final bottom. It was possible that we got it on Tuesday, but the futures are kind of under pressure this morning, and I mentioned when I did a report yesterday that this would have been day 17, I think, and or maybe 16, and that's a little bit too early. Now, there is a caveat here. This daily cycle ran for 60 days. That's really stretched. Normal is about 35 to 40 days. And often what happens is after a really long cycle, you'll get a short cycle that kind of balance out that overall intermediate cycle. So I'm expecting this cycle to be short, but 16 days might be a little too short. So we might have to go into next week before we could get this final bottom. But again, that being said, we're closer to a bottom than we are a top. And so it's now becoming very dangerous to, I don't know that you want to initiate shorts now. That's probably really dangerous. And if you are short, you definitely want to be thinking about at some point controlling greed and saying, "Hey, I've made enough. I want to make sure I don't get caught in the counter-turned rally when it starts." And again, same thing with gold. Price has to come up, has to break this intermediate downtrend line, and it has to turn the 10-week moving average back up. Now let's widen this out just a bit to the weekly chart, and you'll kind of see I had noted this before, that price had just gotten stretched way too far above the 200-day or 200-week moving average, and at some point we were going to get a regression event back down, and we're getting that right now. And I suspect, because I do think we at this point that we're probably in a bear market that may have another year or so to run before it's over, that we're going to go below this 200-week moving average. Similar to what happened here, we stretched a long way above it. We dropped below it. So probably going to have to drop below this before this bear market is over, and then we get the next bull market after that. But again, just an example of regression in progress. Stretched too far above the mean, and now we're in that regression event that's going to take us back down to and probably considerably below this long-term mean. All right, back to the daily chart. This is on a more shorter time frame. The dailies, again, stretched. This is stretched way too far to the downside, down below the 200-day moving average. Again, we need to, before you want to sell longs, we need to break this trend line, and we're going to have to close some or all of this gap between price and the 200-day moving average. We're just stretched too far below the moving average, and even if we are in a bear market, we're going to have to alleviate that stretch, clear the bearish sentiment before we can start the next leg down. So I'll say it again, you want to buy bottoms, you want to sell tops. We are clearly closer to a bottom here than we are a top. We're very oversold on RSI. We're also oversold on the weekly RSI, although we do now have a divergence, which suggests that we're getting pretty close to a final intermediate cycle low. And again, as I said earlier, it's possible that we got that bottom on Tuesday, but that's 17 days. That's probably a little too early, even though we are expecting a short cycle here. So we might have to go into next week before we complete this daily cycle low and what I suspect will be an intermediate cycle low, and then that will especially if we get another leg down, that'll cement in the bear's mind that there's no risk on the long side, just like they thought there was no risk on the long side in Bitcoin, and then it turned out there was. Up here it seemed like there was no risk on the being long stocks, and clearly there was. We're also seeing, and I mentioned this one several times before, that it was just dangerous in energy. It had gone up for far too long, and the risk was that you could get caught at the top, and it's starting to look like, at least this daily cycle looks like it's probably rolling over, and maybe we'll get something that is identifiable as a intermediate cycle low here. So we've kind of got some warning signs here. This little peak or dip dropped slightly below this one, and then it sure looks like this cycle has topped before it could break above this. So we're potentially setting up for a lower high and a lower low if this was to come down and drop below this pivot right here. Then we could get something that I could recognize as a clear intermediate cycle low, and then we could be set up for another leg higher. And then if we go over to the energy stocks here, kind of the same thing, and I can widen this out, and it even becomes more apparent. They were just stretched too far above this 200-day moving average. Let me back this out a few years here, and it becomes more apparent. So here's it gives you a little bit more perspective. Just too far above. We need a regression event. Looks to me like we're probably starting it. We're going to need to come back down, probably test this 200-day moving average, maybe drop below it. So all of the people that were trying to catch every last penny, it probably wasn't that important, because you're probably going to get another entry into this sector down in here somewhere, and then you'll be at the start of a new intermediate cycle instead of trying to catch every last penny and playing musical chairs at a top. All right, so at this point I think I'm probably going to look for a bottom in stocks. I mean, it's possible that we hold that bottom from Tuesday, but right now maybe sometime next week is when we get that final bottom, and then we start a rally that catches all the shorts on the wrong side, and then they end up giving up all their profits.